Good evening everyone and welcome to Admiral Markets webinar. Today is 2nd of March 2015. My name is Nenad and today we will talk about 5 different pairs, and I hope that we will have a great week as we had a prior week. So prior week was very good. Concerning our trading, we got approximately around 300 pips, so I hope that this week will also be very good to trade. Okay, I wish all newcomers and all standard visitors good day, and now we can start. And before I begin, as always, our standard risk disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. The risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk disclaimer, you're also proceeding further with me, okay? And the final part of risk disclaimer, Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not a .co.uk website, but a globalnews.com website. Forex is risky business and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So with having said that, yeah, great. I see that sound is good. Here from China is saying sound is great. Great. Okay, also I send my regards to China. So I also need to tell you guys that today we have a great start for bonus campaign on Admiral Markets and M Trading VC, which have joint webinars. So guys, for all of you who want to get into the bonus, it would be excellent to actually start this from today. I myself, if you want to listen to my opinion about the bonuses, I like these things because especially bonus can help you to get the great advantage over trading in accordance to your equity, and it can give you a good head start and expand your margin. So actually having a bonus is great. Also, I need to tell you that now today the information I got is that Admiral Markets and M Trading will give you up to 50% of bonus on deposit for new and existing accounts. Basically, I will show you on my second monitor how it goes. So it's 0.25 lots per each euro bonus if you want to keep the bonus and withdraw the bonus. So for example, if you want to invest, this is just for example. For example, your deposit should be, let's say, 1,000 euros. You will get a total of 300 euros bonus, and your overall account will show 1,300. Okay, so basically this is a great thing for you. You can calculate the bonus on this page if you want to expand your margin. You have 180 days to complete the bonus, so basically it's around 0.25 lots per each euro bonus. You should trade that. Now obviously guys, if you trade multiple pairs, this bonus can be achieved, but obviously you need to trade multiple pairs. So it's basically very hard to achieve the bonus if you trade only with 1 or 2 pairs. But if you want to exactly trade, this should work. I don't know why it's this stuff, but this should work. So basically you just draw the slider like this, and it will show your bonus. So basically, if you trade multiple pairs, this bonus is easily achievable. Now, if you don't trade multiple pairs, it will be hard, but there is still there is a way to achieve the bonus, and there is a special strategy with low risk if you want to achieve the bonus. So yes, it is achievable. The question is, Graham is asking, any plans for Admiral to do spread betting? At the moment, Graham, I don't know. I think that spread betting is not the current option. Maybe in the future, but as I know, at this moment, particular moment, I don't think that there is an option for spread betting. So guys, just want to tell you that this can be a really good thing for you to concentrate if you want to open the account at this particular moment. Now it's great moment to get those bonus funds which can help you to achieve your goals. I will tell you just before before I forget that I also started, when I started to trade with Admiral Markets, I also got the bonus, and basically that bonus was a great tool to expand my margin. And I was really happy to get the bonus, because it has saved me, guys, a lot of times. For example, I could make a bigger entry, bigger volume traded. I was not particularly concerned about keeping the bonus, about withdrawing the bonus. My primary goal was to expand the margin. So instead I use, I don't know, 0.2, 0.3, I could use 0.5 or 0.6. So it's a great tool really to basically give you the possibility to expand your margin. And if you suffer from a for example, if you suffer from a drawdown, it can give you a good chance to basically recuperate your account, to get you in the tracks again. So it's really a good thing. And if you ask me how you should trade with the bonus, I always say treat the bonus as a, let's say, a bigger margin. Treat it as additional tool, not to withdraw the bonus. You need the money for trading, so treat it as additional tool to expand your trading margin and trading capabilities. And bonus is a really great thing, really. So this is the time now to invest. If you want to invest, then this is the time now to invest. Okay? And because these are joint webinars, both Admiral Markets and M Trading have the capabilities of giving you the deposit bonus. Okay? These are the links, so you can visit it after we finish. Okay? For all newcomers and all traders who visit this session recaps regularly, I will just stress few important things about a recap trade. So all session recap trades and the analysis is done with Camarilla MACD, which is my proprietary method of trading. The thing is that before you want to either consider taking a trade, you need to know that you can enter within 5 to 10 pips of the predicted level, of course, if it's in agreement with your system. Now, for all of you who follow my trades without using their own systems, I always say 5 to 10 pips is the buffer entry. You probably asked me about what POC means. So basically, now I'm showing you the slide about risk disclaimer. I will paint a little bit here. So let's say that you have a that we have a support here. Now, if you watch and if you trade by standard support and resistance level, support is basically a single line, and it is a single level where we expect the price to fall to after just to buy. So we are basically buying into support. Okay, we want to price to fall towards support in order for us to give us buy order. Okay, now POC zone is basically either a supply or demand zone. So it's the zone where we expect the price to react. So when price is falling towards the zone, this is call it POC, it means points of confluence. Basically, it's the zone where we expect the price to be bought, okay? That is a form of demand zone in this case, where we expect the price to react and jump from it towards next resistance or supply zone, okay? So basically I use POC zone is adapted, it's an adapted method of standard supply and demand calculation, but I have adapted it to be very easy to use and analyze, of course, with Camarilla MACD. So when you ask me about POC or points of confluence, you just need to know that we treat POCs as supply or demand zones, and we are using those for entries, okay? So it's usually 5 to 10 pips buffer of the zone for us, basically for us to spot an entry. So when price is pulling and trying to reach POC zone, you should always pay attention to reaction, and you can enter within the zone. It's basically trading in the zone, which is always and which should always be an edge in trading. You should always respect your stop loss. So it doesn't matter, guys, if you use 50 pips or 100 pips or 30 pips stop loss. The basic thing about stop loss is you are using it to basically give you the risk in trading. When you open your position, you're always basing your volume traded or lot size according to your stop loss. So if your risk is 0.5%, it means that your risk is fixed. So you can put 100 pip stop loss. Obviously you would use lower leverage for that particular entry. If you use 30 pip stop loss, then you can use higher leverage, but it still needs to fit into that 0.5% of a risk, okay? Respect your stop loss. Add the spread to your stop loss. So guys, usually if you want to make an entry with your trading system or with your position, then you usually want to basically add the spread to your either stop loss or pending order. If you're buying, then usually we add the spread to pending buy orders. If we are selling, we don't add any spread to sell, we just add the spread to our stop loss. We take only one position, so it can be either position trade or alternative trades, but sometimes I can say we can have two position trades. That means that when market is ranging, we can take both short and long entries, but it depends whichever hits first. Position trades are trend trades, alternative trades are deemed counter trend trades, okay? Breakout trades are and scalp trades are done independently, so they can be treated as a second entry. So if you make, for example, position trade, you can later try to also go with a breakout trade, okay? Usage of trailing stop is highly recommended. The market has been very volatile, so we want to use a trailing stop also. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Pay attention to my Twitter updates, because very often I can basically give you update by Twitter to maybe scale out a position or maybe a revised trade. Greg is asking, add spread to TP on a short. Yes, you can always add the spread to TP, but Greg, you know, if you use trailing stop occasionally, then you need really a strong momentum to push the price towards your TP. But yes, you should always add the spread to your target price, because especially on a short, because spreads are different. Various brokers use various methods for spread calculation, so I'm always that isn't much. It's usually between 1 and 3 pips. So yeah, I advise you, if you go to straight TP, I advise you to basically add the spread on a short. But if you use trailing stop, then the chances are you will be stopped out in profit before the price reaches full potential. So yeah, the answer to your question is yes. Scalp trades should be done at or very close to important support and resistance levels. Scalp trades are calculated by historical levels and Camarilla. You can freely add those levels to your system. And the term pips pool, it's the maximum available number of pips we could have made on recap entries, guys. Okay, so it's the maximum available number of pips we could have made on recap entries. Now let's see the prior week. So session recap 23rd of February 2015 results. Euro dollar gave us 170 pips pool, pound gave us 100 pips pool, Australian dollar gave us 30 pip pool, pound yen wasn't qualified. Total pip pool was 335 pips. Great week behind us. So I'm not sure that this was really a great week. We didn't have a single loss. Every single trade went into a profit. Definitely the trade of the week was euro dollar. Without any doubts, it was euro dollar. Let's see the slides. So this was our webinar time. The price went to sell position a little bit later. It was 2 days or after we made our webinar. But the trend on euro dollar is really strong. So this was not, I cannot say a hard analysis for me to make for euro dollar, but definitely when you have a great good trend, that is when especially Camarilla MACD shines. And I am a trend trader, so I really prefer to see good trends and strong trends, and that is when the analysis works wonders. 170 pips in 1 day, 2 days. This was what we had on euro dollar. Copy paste slide. This is a snapshot of a slide which I used a week ago. So this is how I show you the performance each week. Every week is the same. First we go with prior week results, then we move on to this week's setups. So this was the entry, this was the target. I don't know how much you have made with euro dollar. You could have made total of 170 pips, but even if you make only 70 pips, guys, this is free money. This is always good. Free money is always good, right? Pound, look at the pound. Basically the pound was also pretty much good. It came 10 pips, 10, 11 pips from our buy position, and look at this. It basically went to target price 55.50, bang here. I can say it's 150 pips, but I said on Twitter that you can take the profit when the price was 100 pips. So basically I count this trade as 100 pip winner, but maybe some of you got even bigger pip count because it went straight to our target. Okay, it was very good trade. Australian dollar also good. We had a sell position and we had basically something around 30 pips of a profit after it hit our level and went down. So okay, Australian dollar was good, not as good as obviously as pound and euro, but still it was good in its own purpose. Pound yen wasn't qualified. But yet again, sometimes that will happen, that our trades are not qualified, because guys, if I want to trade, I want to see a bigger pullback. If I don't see a bigger pullback, usually I'm right about the trend. So if you don't see a bigger pullback, you can use my guidance for a trend. So look at this. It says GBP yen is in uptrend, is indeed in uptrend. So although it didn't make a pullback to our buy zone, it basically continued in our trend direction. Okay, so we had a trend confirmed, but the price didn't make any pullback. GBP AUD was good for 35 pips overall. I said explicitly on Twitter that you should manage the trade, because the trade opened at this point, but then it failed to break through 2800. Now guys, remember 00 round number, 50 which is a rounded number, but I treat it as a round number because big banks treat 50 as a round number. You should always book your profits or pay attention to 00 and 50. Those are natural support and resistance levels, especially because big banks and big money is trading also on 00 and 50 round numbers. Okay, so GBP AUD was good, 37-35 pip pull. So at least I hope that you made some 15-20 pips out of it if you use trailing stop. It still was good. Now we need to move on to this week. So market plan, as I see it now, I cannot tell you guys where you can make a specific entry on euro dollar, but I can tell you that that basically sell position close to 12.30 are justified because our stop loss is 12.55. If 150 is broken, we should move towards 11.00. Okay, so you should also pay attention to euro dollar breaking 1.1150. If it breaks, we should move on to 1.1100. So this is breakout position, but sell position is this one. My Twitter, guys, for all of you who still do not know or who are maybe new to the webinars, my Twitter handle is tarantulafx@gmail.com. Okay, so I will write it again, tarantulafx@gmail.com. So this is my Twitter, and you can freely use it and follow me on Twitter. I also post other articles concerning investment, finances, so it's always an interesting read. And of course, my trade analysis is always backed up on Twitter handle and account. My scalping levels, no guys, this is from preview webinar. I forgot to basically yeah, but you see guys, yeah, this was a mistake because I included this in this slide. But if euro breaks 12.55, you can try to go with the buy scalp, putting only 10 pip of a stop loss, because this level, I will show you now the chart, this level is I will show you, this level is pretty much strong. Let me show you the chart here. So guys, this, just pay attention to euro dollar. Look at this zone here, 12.55. It's indeed a good spot to sell, but if it breaks, because we have already almost a triple top here, and if it doesn't drop, it can develop into inverted head and shoulders pattern. So in that circumstance, this will be treated as left shoulder, this will be treated as head, and if it goes straight up from this point and it doesn't break down, where our sell is, then guys, this is definitely a potential buy breakout trade. Yeah, this is my email, Mick, but it's the same. My Twitter handle is Tarantula FX, because people are occasionally asking me about my mail address. It's always the same. So my Twitter is Tarantula FX, and my Gmail account is also tarantulafx@gmail.com. So if you have any questions, you can always ask me. I'm always there to help. But please concentrate on and focus on Twitter more than my Gmail, because very often I get so many emails that, you know, it's very hard to navigate through it. But on Twitter I'm always following. But also, if you have any questions, then I can, at the end of the day, I usually revise all of my emails, and I send the answers to questions. So yes, the question was good. What if euro dollar breaks 55? I think that it can be bought as a scalp trade, but this should be treated as a trigger happy trade, fast in, fast out, and that is how you should treat it. Because my presumption is, if it breaks 12.55, it can go up, just collecting stops which reside above this level, but then ultimately it will reverse. So if you want to go with 12.55 buy breakout entry, then you can basically treat it as a trigger happy trade, fast in and fast out. But definitely you can see how I see and what I think about euro dollar. It still is in sell the rallies, definitely. If 1.1150 is broken, then you just should watch daily chart, and if 50 is broken, we should get to 1.1100, because the price will magnetically be pulled towards this zone here. Okay, so that is all about euro dollar. So our primary concern is to sell. If it goes up again, we have tight stop loss. If it breaks 12.55, then we go with fast scalp breakout entry position. What about pound? Pound is definitely ranging, and guys, this is now a buy trade. In this, you can see here it's ranging, and 50 pips is stop loss. Again, guys, 0.5% is the risk I'm using for this trade. Because what can happen is pound is in a it's a strange pound is still looking bullish, although on intraday time frames it looks like it's bearish. But the thing is, I'm already in the trade 53.53. I got into that position. My stop loss is 53 pips, exactly at 53.00. But you know, my risk is, it doesn't matter, my risk is 0.5%, and I'm waiting. I would like to see 54.80 on pound. I will show you, I did the analysis on pound today. If you saw the analysis, I will remind you once more of the analysis for pound. And the guys, if you did the trade which was presented to you today, basically I'm showing you now my other monitor, my other screen. This was the trade setup I did for pound and analysis, and we got a good breakout trade. It was not overall, it didn't give us a huge number of pips, but you need to know that today is Monday, market has been slow, and you can see that I made the analysis that if this level is broken, we will touch 53.63, and basically that was 20 pip good 20 pip win trade. This is considered as a rectangle, and before the analysis this rectangle was still valid. Now the rectangle is not valid. We have other setup on GBP pound. I will show you that, and I think that basically pound can be bought from this point here. Look, it's bullish even on 4-hour time frame, but this is this looks like a retracement. Okay, so this zone here 53.50 is a buy zone. Look at these historical buyers. Okay, and this also is a good buy zone 53.30, and only if 53.00 is broken, the pound will go lower. So I think that it can bounce towards 54.80 zone. Why 54.80? Because at 54.80 we have a good confluence of previous sellers and X support now turned into resistance. So guys, the price could be jumping off this zone towards 54 plus levels, but this is definite take profit zone if it gets to this point, and a possible sell. The only thing this analysis would be invalidated is that basically 53.00 is broken. Now the question is basically for Alexandru. Alexandru is asking a question. For trading scalp, what stop loss is? Guys, I would ultimately put my stop loss, it's called dead stop, at 53.00. So I don't recommend putting your stop loss below. Even for a scalp trade, this is ultimate stop loss. So basically you should pay attention to how it behaves if it's hit. But definitely if 53.00 is hit, then the price could basically proceed to lower levels. As of now, we will see. I am already in this trade. I would like to see a jump, but you see 0.5 risk is the risk I'm presuming for this particular trade. So 0.5 risk, not a big risk, but still potentially good trade. We will see. GBP is ranging, and those ranges are not very easy to trade. You need to know about it. So if you want to trade a ranging pair, then usually you need to have a bigger stop loss. You need also to have a how can I say, you need to watch ATR. If ATR is big, then you should definitely use a lower leverage, even lower risk than 0.5%, and you should pay attention to also tops and bottoms, and GBP dollar is definitely ranging. Okay, so as you could witness today, after rectangle breakout, it came to our target, then it was basically rejected. So we will see if it will be rejected from 53.50 zone. Okay, again, stop loss is at 53.00. Australian dollar is in downtrend, guys. I am giving you a warning because tonight during the late Asia session we will have cash rate announcement. It will happen on 4th of March, so it's exactly in some it's 1, 2, 3, 4, 5, 6, 7, 8, 9 hours from now. It's in 9 hours time from now, and it's expected that Australian cash rate is cut by 25%. So basically, guys, if you want to take a trade, a low risk trade, because stop loss is really small, is low, really, it's only 30-35 pips, I would like to see Australian dollar jumping prior to cash rate decision to 78.30 to 78.50 level, and then I would put stop loss at 78.85, targeting 77.50 and 77.00. So we will not see basically that it will be too late for European traders. But yeah, Jörg is saying, lucky me in China, it will be in the morning. Yeah, for Jörg, who is basically trading from China, it will be early morning, and I will show you why I think that there could be a good pullback. Guys, this is the full analysis I did. This is exclusive analysis I did for Forex 3 today. I will show you now. You can read it on Forex Street website. So this is my analysis: Australian dollar threat in range prior to cash rate decision, and the actual analysis is here. So actually what I want to see is this is also rectangle, and Australian dollar is basically held within the rectangle also because of this inner trend line. So if you pay attention to this slide, to this chart here, you can see that we have inner trend line, and we can see L3 and rectangle top, which are holding the price. You can see that the price has been rejecting from this strong confluence point. But if the price jumps from this point, breaking through this point, it should hit H3 confluence or H4 confluence, and then after the rate cut has been announced, it should drop. So this is analysis, this is my prediction, how I see it could happen. So the only thing I would like to trade Australian dollar at this point is I would like to see a bigger pullback to this zone before a good short trade. I definitely don't want to buy into support unless I'm doing a breakout trade. So at this point it's really too low for me to enter now. I would like to see a good pullback towards H3 50% and previous bars now sellers confluence, and also H4 61.8 confluence. So if this happens, we could see a good sell-off towards 77.45, 77.00, and our stop loss is at 78.85. Okay, so we need basically to see if that pullback will happen. But guys, cash rate announcement, it can be risky, so please take all of those things which we are talking about today in consideration if you trade during cash rate announcement. New Zealand dollar is in uptrend, 74.90, entry position 74.60 is our stop loss, 76.00 is the target, and basically New Zealand dollar is in uptrend. So I would like to see a pullback to this zone here. We have a nice confluence here also. It's Camarilla levels, but it's also 74.86 and 74.95, 61.8 confluence. So if we hit this zone here, it could be good for a potential long entry. We also see a history of buying. This is good buy momentum, this candle here. So it could give us initially good number of pips. Now, obviously, if Australian dollar is in still good uptrend on 1 hour time frame, this top should be broken, and 70 basically this top should be broken maybe, and 76.50 should be touched. But the thing which bothers me on New Zealand dollar is that this looks like head and shoulders, guys. This is left, this is head, this is right shoulder, and if this level breaks here at this point, this is important level. If this level breaks here, we can see a good sell-off. So that is why I'm basing my presumption on this, as you can see on this slide, 74.90 buy position, 74.60. It's 30 pip only stop loss. Target is 76.00. Maybe if it goes above 76.00, it can touch 76.50. But my primary trade is to go long here, putting my stop loss there, and ultimately, if I see a good momentum push, then obviously trailing stop will not be hit, so it might give us even a target price. But yet again, I'm advising you to use trailing stop. Okay? So New Zealand dollar is also close to our entry. And dollar CAD, it's an uptrend. We can have buy position around 24.90. 24.60 is stop loss. 27.00 is the target. So dollar CAD basically wants to have a good, this is uptrend because we don't pay attention to this now. We pay attention to current swings. So this is low, this is high, this is swing low, this is swing high, this is higher low, and basically higher high. So this is definitely uptrend on intraday time frames. Okay, so this is intraday time frames, and a good pullback towards the zone would be really appreciated at 24.90, 24.60 is a stop loss, and 27.00 should be the target, guys. Because if this rejects from this region here, it still has the possibility for the price to go upper, in contrary to Australian dollar, sorry guys, to New Zealand, which is showing head and shoulders. Even on a jump, it still will be head and shoulders. Dollar CAD does not have any head and shoulders. It's a zigzag and it is bullish. So we will see if we get the price. Okay, so you can ask me questions now. I will roll through these slides again. So if you have any questions, guys, of course, do not hesitate to ask me. So this is euro dollar market plan. Okay. This is now pound dollar. This is Australian dollar. As I say, it's a cash rate announcement, so be wary. Australia is expected to cut cash rate to 0.25, basically 25%, 0.25% drop, and definitely rate cuts are always bearish. So I'm hoping that the price will basically hit our zone and then sell into, I will show you this screen again. So it would be really, really good if this price might hit and pull down a bit. Okay, now let me show the slides, guys. Sorry, this was my other monitor showing. So euro dollar, euro dollar. Do you see the screen now, guys? Do you see a euro dollar slide? Now the slide is good. Just confirm that you see the slide. Good. So euro dollar. I will roll on through a chart again. Do not worry. So euro dollar, pound dollar, Australian dollar, New Zealand dollar, and dollar CAD. And I will show you this again. Do you see the chart of dollar CAD now? Good. So dollar CAD, this is a trend line. You can see from this perspective that dollar CAD is bullish, guys, on 1 hour time frame. This is okay if you watch this price action prior to Friday's price action. You can see it's a good uptrend, then we had some sort of a sell-off. But look at this. Now it's still, this is low, this is high, this is higher low, this is higher high, this is higher low, we see higher high. So this is a zigzag on dollar CAD. And I would like the price to pull back to 24.90, and I think it has the possibility to go to 27.00 because we do not see any head and shoulders compared to New Zealand dollar. Look at New Zealand dollar. it's close to our buy zone. So if you remember the slide, New Zealand dollar is 74.90 by 74.60 stop loss. But look at this. We have head and shoulders here. This is left, this is head, this is right shoulder. So this is a form of head and shoulders. Look. And it still wants to go down. But guys, this is, if you watch, this could have been inverted head and shoulders, and this stop has been broken, so this is still uptrend. It doesn't matter, we can see head and shoulders, but this is still uptrend. So if price indeed makes a pullback towards 74.90 or 75.00, guys, this could be an entry, and even this point here could be an entry, because our stop is basically 74.60, and all of these rejections can propel the price to the upside. This is why we should use a little bit bigger stop loss, because this is momentum candle, and this candle started to basically form, look at these buyers. So buyers kicked in at 74.75. So 74.75 buying, 74.75 opening candle, momentum Marubozu candle, almost a Marubozu. This is strong momentum candle. Look, and now if the price even pulls back to our zone, we could still see a rejection. And that is why our stop should be at 74.60. Okay? So pay attention, guys, to price action. And the only thing my target on New Zealand dollar is lower is because we see head and shoulders. Contrary to dollar CAD, a clear zigzag. Up, down, trust, pullback. What is a trend? It's a series of trusts and pullbacks. Uptrend is a series of higher highs and higher lows. So this is low, this is high. This is higher low, higher high. Higher low, higher high. Price is making a zigzag trend bullish pattern. So we will see, but if we get a pullback towards the zone, I will buy it, and also New Zealand dollar, I would look for a buy a little bit lower. So we will see what will happen on these two pairs. So New Zealand dollar, dollar CAD. So these are the slides, guys. So now the screen is not stuck. I'm sorry again, because I was showing you my other monitor, my other screen, and the actual slides were on other screen. So that is why you saw a stuck screen. But yeah, it was definitely my mistake, so sorry for that. I'm trying to juggle from screen to screen and show you why my trades and my analysis looks like how it looks. Jan is asking, what do you think will be your favorite trade of the week? My favorite trade of the week, I would like to see dollar CAD, really. I would opt for this trade to be trade of the week, really. Still 25.00 could also be a buy position, guys. Watch out for that potential entry, okay? That could be a buy position, but you still need to wait and see whether it will happen. I would also love to see Australian dollar, because this is a good place to sell, guys. Now I see it's going down. It's 77.70, 77.68. But ultimately, this could be a good sell, because our stop loss is here, and look at the targets. If indeed the cash rate, if indeed there will be a rate cut during the night, that should definitely give us a spike to the downside, because each rate hike is treated as bullish and each rate cut is treated as bearish. Price action, and potentially it can be also treated bearish for next 2, 3 or 3 weeks or full month. But we will see. I still think that Australian dollar has the capability to pull back towards 78.30, especially because it's been rejected of 77.50. But if it breaks 77.50 before, rate cut announcement, then I'm not sure if we will get some sort of a pullback, so we will see. Pound also, it's still in our buy zone. I'm looking for a rejection of this zone towards 54.80 baht, guys. Stop loss should be here. And guys, risk no more than 0.5%. You need to always understand how proper risk management is done. It's not all about making entries, profits, it's about risk management, okay? So we will see what will happen. I wish you a great week, really. I will be here with you with analysis again for tomorrow, and possibly maybe tomorrow I will skip if there is nothing new, but I will always come with analysis as I do each day. So follow me on Twitter, Forex Factory, Admiral Markets, and Forex Street. So all of my analysis is having a watermark, and that if you see the watermark, then you know that that is a genuine analysis. The questions now. Greg is asking, does price tend to whipsaw when it's a cash rate announcement? No, Greg, it's not a strange question. The price may go a little bit like this, but it shouldn't, if it hits this level, it shouldn't make any whipsaw and gets back. So it can be a little bit wild prior to announcement, but once announcement is done, it will be usually be a straight jump or straight fall. Okay, straight jump or straight fall. Goran is asking why dollar is so strong against all other pairs. Because dollar is still safe haven. Euro zone is still affected by a possible Greek exit, although I don't think that there are some good chances for Greek exit at this point. Then dollar market, you know, guys, if you trade, for example, stock market, usually stock market will react completely different from, let's say, euro dollar, because if you see the investors pulling out the money from stock market, that will make a volatility and push another cash. It will push another cash flow in the markets. So when stock market is going up, usually the currency will go down. It's about pulling in and pulling out the money from a stock market. So dollar is reacting to bad euro news. Now don't forget, dollar is stronger versus Australian dollar because Australian economy is saying we will have another rate cut, and governor of Reserve Bank of Australia is saying that 75.00 should be next target for Australian dollar. So you need always to try to align fundamental analysis and technical analysis. Now obviously dollar is not so strong versus pound. That is why we see a pound is still strong versus dollar. Pound is still ranging versus dollar. You can also reflect this to euro GBP. When you see that GBP dollar is going in a range and euro dollar is going up, that usually will mean that euro GBP is going down. That means that GBP is much stronger than euro currency, and the strength of dollar versus GBP is not as strong as in euro versus Australian dollar. I hope that you understand what I'm saying here. Yeah. What if Australian rate is maintained the same? I think if the rate isn't cut today, Australian dollar can go bullish. It can jump even above 79.00. Okay. So if we don't see a rate cut, then guys, the pair can be propelled up above 79.00. So it's all about if we see cut or not. Okay. So I hope that you understand what I was implying. I think that I will do another correlation webinar. So I will teach you about correlation once more. That can be probably scheduled in next few months. So I will explain how correlation in Forex market works and how you should compare currency strength one to another. As we can also compare dollar strength to euro, dollar strength to Australia dollar, dollar strength to GBP. But you know, if you're a day trader, you usually can understand the correlations between different currency pairs. But I will definitely show you the webinar about Forex correlations, because I know that many of you indeed want to trade all of those currency pairs, and actually that's a good thing to trade multiple pairs, not just to be stuck on a single pair. So guys, this is everything I had for you today. Thank you for listening. Thank you for your questions. Yeah, thank you Greg, thank you EUR, thank you everyone, and I really want that we have another successful week. Talk to you soon guys. Be ready for cash rate announcement, and I wish you really to trade safe and many green pips. Cheers.